Yeah, I mean, of course, it's going to get more difficult. Land tends to be more constrained. It is a trend that we've seen over a longer period of time in the US as demand has graduated and migrated much closer to population centres. But of course, land in many of the major US city locations is perhaps more plentiful than it is in Europe. So it is going to be a challenge, and it'll be a balance between what you're paying for your real estate and what you're paying for your location and transport costs. And there'll be compromise along the way. There are some markets clearly in Europe that are more constrained than others. The UK is clearly a very constrained market, whereas Poland significantly less so and much easier to secure sites there that can potentially take larger footprint buildings. But I'm just going to come back to a couple of things the guys talked about. Building design is evolving, and the one thing that scares the crap out of any investor is if you do a build-to-suit, let's say it's a cross-dock and it's got some cool modern technology in it in some shape or form. The thing that scares the crap out of you is technology is moving at a pace, and so sign a 10-year deal. 5 years' time, they get a better opportunity with another developer to go and take a building with all of the latest gizmos and gadgets, and it's a great economic proposition for the customer. So there is some testing out that needs to occur over time as to the robustness of those facilities in terms of specification. But when we talk about big box, which is where we've been focused, it remains pretty generic. I do believe that there will be significant growth in investor appetite for cross-dock facilities because the major 3PLs and distributors are starved of suitable product in the right locations to be able to service particularly the e-commerce customers, same-day delivery and all those good things that we've talked about many times before. So there's the building design piece, which will evolve, and I think we'll all get to understand a little bit better. The most important thing, the reality of what's happening now, is I can count on one hand the markets that have any overhang of vacancy right across Europe, regardless of whether it's Southern Europe or even Central Europe at a certain point. And so there is a huge tightening of space. Occupancies are running at levels beyond prior peak. Rents in the UK have, as of last week in our portfolio, recovered to prior peak. And values in the UK are only 50 basis points away from prior peak. And if you go from UK to Central Europe, the spread from prior peak is 50 basis points UK to 150 basis points or so in Central Europe for core product. The market is moving incredibly quickly, and it's becoming incredibly competitive very fast. Combined with developers not producing new supply into the market, so you're getting customers who are getting frustrated by that. And I think this year is going to really see us turn the corner and the balance will tip from build-to-suit to speculative supply, where those like us have land to bring that through. So that's what everybody's getting excited about on the street up above, including e-commerce.